Welcome to Session 2 of the Basic Tax course. We're going to begin Session 2 with a review of the Session 1 homework answer key. So to look at the Session 1 homework answer key, you should refer to your manual from Session 1, and page 24 of the Session 1 manual asks you to figure tax for 8 separate scenarios. The first 4 scenarios involve use of tax tables, and the second 4 scenarios involve use of tax rate schedules. So let me just begin by opening up Publication 17, which is, of course, the document you should have referred to while working on these assignments. And let's read problem number 1 together. It says, for each of the following individuals, use the tables. And number 1, Mr. J's filing status is married filing separately. His federal taxable income is $29,580. His federal tax is blank. So going over to the tax tables, we would find the column that reads $29,550 through $29,600 because $29,580 is in that range. We then look for the filing status, and his filing status is married filing separately. So if you read up here, married filing separately, we follow it down, and that means that the correct answer to question number 1 is $4,018. Moving down to the next question, number 2. Mr. and Mrs. H are married filing jointly. Their federal taxable income is $49,000. Their federal tax is question mark. So we're going to move through the tables until we find a column that says $49,000. And here we have it right in here. So we again highlight the correct column, and we're looking for income that is at least $49,000 but less than $49,050. And for our taxpayers, that means that we're going to go to the married filing joint column, and that is this column right here, and it makes the correct answer $6,516. Question number 3. Jane's filing status is head of household. Her federal taxable income is $36,050. So again, we're going to go back to the tax table and scroll till we get to $36,050. And remember, her income is $36,550. It is not less than $36,550. So remember the instructions here. It says at least this amount, but less than this amount. Well, her income is not less than $36,050 because it is $36,050. So we follow that column over. Her filing status is head of household, which is the final column in the far right-hand side. And so when we look there, we see that the correct answer is $4,814. The final problem using the tax tables is problem number 4, and it says John is single. His federal taxable income is $1,500, and his federal tax is blank. So we're going to scroll back in Pub 17 until we get to $1,500, and there we have it. Remember again that his income is not less than $1,500. It is $1,500, and this time we're going to go over to single, which is the very first column, and his tax is $151. So that is problems 1 through 4. Now we're going to take a look at the tax rate schedules and figure the tax for problems number 5 through 8. And these are a little bit more work. So again, we go to Pub 17. And if you recall in the last lecture, I did explain that IRS does provide these tables on page 268 that you can use to figure tax. However, we really wanted you to understand the methodology of what's going on by looking at the tax tables and doing it there. So here are the tax tables, and I've already done the computations ahead of time just to make the lecture go a little more quickly. And reading the problems in the manual, number 5 says, Mr. and Mrs. B are filing jointly. Their federal taxable income is $151,089. What is their federal tax? So the starting point is to take that $151,089 and then go to the table and see where they fall with that amount of taxable income. With that amount of taxable income, they are falling between $137,300 and $209,250. So the instructions therefore say to take their income of $151,000 and subtract out $137,300. When you do that, you get $113,789. The next step is to look at their tax. Well, according to these tax tables, they are now in the 28% tax bracket. So we're going to multiply that difference of $13,789 by 28%. And when we do that, we get $3,860 that we have figured. So then we move over to the next step was to take that $3,860.92 and add that to the amount shown on the tax rate schedule. And that is $26,687.50. We add those two numbers together and we get $30,548.42, which for tax purposes on the tax return would round down to $30,548. Okay, the next problem in line is problem number 6. Jeff is single, and his federal taxable income is $133,050. Again, we go back to the tax rate schedules, this time to single, and we enter his taxable income of $133,000. We then look to see where that falls, and it falls on this line right here. We then subtract out the lower benchmark number of $82,400 from his income, and we get $50,650. That puts him in the 28% tax bracket, and so we multiply that number by 28%, and we get $14,182. We then add $14,182 to the number appearing on the tables, $16,081.25. Now, you might be asking, where do these numbers come from? Well, these numbers are, in fact, all of the tax calculated on the first $82,400 of income for that filing status. So this amount of tax has been calculated on $82,400, and we're going to add the tax on $82,400 to the tax on the difference between $82,000 and what they actually made. When we're all done, we end up with $30,963.25. Next in the Session 1 manual, we come to problem number 7. Sally is head of household. Her federal taxable income is $111,891, and her federal tax is. So this time we're going to go down the table a little bit. Category. All right, so problem number 7. We start off with a head of household filer whose income is $111,891. That is, her taxable income is $111,891. We go to find that line on the tax table, and 111 is somewhere between 45 and 117. So we subtract 45,550 from 111,891, and we get 66,341. Then we add or multiply 66,341 by 25% because this filer is in the 25% tax bracket, and we get $16,585. The next step is to take that tax and add it to the remaining tax that has been calculated on the first $45,550 of income, and that gives us $62,336. We add those two numbers together and we get $22,821.25. That would round down to $22,821. The final problem, problem number 8. Bill is a qualifying widower with a dependent child. His federal taxable income is $139,473. Qualifying widow and married filing joint share the same tax rate schedule and all of the same tax brackets. So that means we're going to take 139, see where that falls on the table, and it actually falls on the same line as problem number 5 did. So we're going to take that same $137,300, subtract that out. We get a difference of $21.73, which is multiplied by 28% and gives us $608.44. We take that $608.44 and add it to $26,687.50, and that gives us the correct answer for problem number 8, which is $27,295.94. And in this case, we would round up to $27,296 if we were actually putting the number on a tax return. All right, so that concludes the review of the Session 1 homework assignment. And I'm going to just navigate to the internet real quick and show you the next step. Time to take the Session 1 quiz. And just to orient you with the layout of our course, I wanted to remind you that the Session 1 quiz test is located inside the LMS of Session 2. The reason for that is that we're taking the Session 1 quiz after you've had time to do your homework assignment for Session 1 and do the reading assignment for Session 1. We are now at the beginning of Session 2. We've just finished a review of the Session 1 homework assignment, and now it is time to take the Session 1 quiz. So please log into the LMS, click on Session 2, and then go into the Test tab and begin taking the Session 1 quiz. Of course, there is the Session 1 quiz. If you prefer to take your quiz on paper before you take it in the LMS, that's perfectly fine. And you can print a paper copy of this test from the Course Manuals tab. Right in the same place that you went to print the Session 2 manual, right underneath that is the Session 1 quiz. So if you'd like to print a paper copy of ahead of time, that is where you can do it. Now, you'll notice that we have the Answer Keys tab in this session like we do in all sessions. And inside the Session 2 Answer Key tab, there are 2 answer keys. And one of the answer keys is the answer key for the Session 1 homework assignment, and the other one is the answer key for the Session 2 classwork assignment. We will not get to the Session 2 classwork assignment answer key until the end of today's class. But at this point, you can, if you wish, open and print a copy of the Session 1 homework answer key. To open a copy of the Session 1 homework answer key, simply click on the link and then type in the password. And the password is Perth. So let me just open up a page that I can type that on for you. When you do print the Session 1 homework answer key, it will look like this. And the password to unlock it is Perth. So if you would please jot that password down. That is the password that you will need to open and print this answer key for yourself. And now that you've jotted down that information, please push pause on the playback of this video. Take the Session 1 quiz, and when you are finished taking the Session 1 quiz, please resume playback of this video, and I will then teach you the content of Session 2 of the Basic Tax course. See you in a few minutes. Okay, now that you've finished taking the Session 1 quiz, let's move on with Session 2. Session 2 is building on information you've already learned in Session 1, in that now we are assuming you are able to identify who is required to file a return and the penalties for a person who doesn't file a return. But now it's time to file a return, and we have to select as the starting point our correct filing status. We're also going to look at the rules for claiming dependents on a tax return and also claiming your own personal exemption deduction on a tax return. So let's get started. Moving over to page 2 of the Session 2 manual, the first topic of the day is filing status. And we begin filing status with a discussion of marital status, because in general, your filing status depends on whether you are considered unmarried or married. For federal tax purposes, a marriage means only a legal union between a man and a wife, or a man and a woman as husband and wife. State law governs whether you are considered married or unmarried. There are 3 important things that you need to remember about your filing status. Number 1, your filing status on the last day of the year, usually December 31, will determine your filing status for the entire year. Also, state law governs whether you are considered married or unmarried. However, there are a number of states that do recognize same-sex marriage, and in that respect, the IRS does not recognize same-sex marriage. So if state law says you are married, but you are involved in a same-sex marriage, then for federal purposes, that marriage is not recognized and you are considered to be single. And number 3, your filing status determines your filing requirements, standard deduction, allowable credits and deductions, and your correct tax. So again, 3 important things to remember about your filing status. Your filing status on the last day of the year determines your filing status for the whole year. State law determines whether you are married or unmarried, and your filing status determines your filing requirements, the standard deduction you are allowed to claim, allowable credits and deductions you might be allowed to claim, as well as how to figure your correct tax. Let's take a look at the 5 filing statuses. Taxpayers must use one of the following 5 filing statuses: single, married filing jointly, married filing separately, head of household, and qualifying widow or widower with dependent child. Some taxpayers will qualify for only one filing status. Others may qualify for more than one status. If you legally qualify for more than one filing status, you should choose the filing status that is the most advantageous for you. Usually, the most advantageous filing status is the one that will produce the lowest tax. However, other factors can sometimes apply. And just to give you an example of a factor that might apply, married filing separately is generally considered to be the worst filing status for a number of different tax reasons. However, an individual may elect to file separately rather than married filing jointly because they do not want to be held jointly responsible or severally responsible for the tax liability of the other spouse. There are a number of different situations where that can be a problem, including situations of divorce. But even when divorce is not on the table, you may have a married couple who simply just want to keep every part of their finances separate, even if it means they pay more tax. So if you qualify for more than one filing status, you should usually take the filing status that gives you the best tax advantage. However, sometimes people will choose to take a filing status that does not give them the optimal tax situation for other reasons. The first filing status we're going to discuss is single. To file as single as your filing status, you must be unmarried, divorced, or legally separated from your spouse under a decree of separate maintenance. If your spouse died during the year, you are considered married for the entire year and you are not single. If you are divorced on the last day of the year, you are considered single for the entire year and you may not file as married. If you are married on the last day of the year, you are considered married for the entire year and you cannot file as single. Married filing jointly, or MFJ. You can choose between married filing jointly as your filing status if you are married and both you and your spouse agree to file a joint return. On a married filing joint return, you report your combined income and deduct your combined allowable expenses. Married filing joint is usually the most advantageous filing status for a married couple. Tax rates for married filing jointly may be lower than for married filing separate. If you file a joint return, you and your spouse are jointly responsible for tax and any interest or penalty due on your joint return. One spouse may be held responsible for all of the tax due, even if the other spouse earned all of the income. To be considered valid, a joint return must generally be signed by both taxpayer and spouse. If you file married filing jointly, you cannot choose to file married filing separate after the due date of the return. Of course, the due date of the return is usually April 15th. So what that means is if you file a joint tax return on March 1st, you would not be able to change your filing status to married filing separately after April 15th. Married filing separately. Married filing separately is generally the least favorable filing status. Married filing separate taxpayers are subject to many restrictions that often cause them to pay more tax than if they filed joint returns. Married filing separate taxpayers do not qualify for the following: student loan interest deduction, the child and dependent care credit, education credits or the tuition and fees deduction, the earned income credit, or the adoption exclusion or credit. Also, more of your Social Security or railroad retirement benefits may become taxable. Generally, you will not be able to deduct passive rental real estate losses, and your capital loss carryover is limited to $1,500 rather than the normal $3,000 limit. If you file married filing separate, You may change your filing status to married filing joint by filing an amended return. And there is no limit on the date for filing that amended return, other than essentially the statute of limitations. You typically have three and a half years to file an amended return from the time that you filed it during the tax season. And if you file outside of that range, the IRS may accept the tax return, but you wouldn't typically be eligible for a refund because of the change in filing status on the amended return. So on a married filing joint return, if you file your original return jointly and later on you wish to amend to file separately, you can only make that amendment from joint to separate before the original due date of the return. If you filed a separate return, married filing separate, you can, anytime after the filing deadline, choose to amend and file jointly. Head of household. Head of household is the most confusing of the filing statuses. It has the most rules that you have to learn. It is an attractive filing status because people have realized that they may pay less tax using this filing status. There's also some confusion about the status. Many of my tax clients think that they're the head of household because they earn the most money. And the IRS doesn't look at head of household based upon who earns the most money. Head of household is a filing status that is essentially intended to be given to single parents who have children in the home. Now, the status can also apply to people other than single people with children in the home. For example, you may be single and you are supporting your mother or your father who doesn't even live with you. So there is more than just that general a single parent with children in the home. But that's essentially, in a nutshell, what the status is intended for. So certainly if you are married and you are living with your spouse, that is not the category that head of household applies to legally. Now, in the military, and sometimes with other employers as well, your employer may ask you who your dependents are and may even refer to your spouse as your dependent. And your employer may consider you to be the head of the household as the chief wage earner for the family. However, for tax purposes, there is a very specific definition to head of household, and that's what we're getting into right here. So head of household. You may be able to file as head of household if you meet all of the following requirements. Number one, you must be unmarried or considered unmarried on the last day of the year. You must have paid more than half the cost of keeping up a household for the year. A qualifying person must live with you in the home for more than half the year. If the qualifying person is your parent, however, they do not have to live with you. And the qualifying person must be your dependent unless the individual is your qualifying child. If you qualify as head of household, your tax rate is usually lower than the rates for single or married filing separate. So what does this considered unmarried mean? Well, it's a very important definition and you have to know it. You have to know it as a tax professional and you have to know it if you want to pass government-administered tax preparer examinations. So what is considered unmarried? Well, you are considered unmarried on the last day of the year if you are not married or you are legally separated under a divorce decree or separate maintenance decree. Now, even if you are married, you are still considered to be unmarried if you meet all of the following tests. So right here we've said to be considered unmarried, you can't be married. But on the next line we're saying even if you are married, you might still be treated as if you are not married for tax purposes and be eligible for that head of household filing status. But in order for that to happen, you have to meet all of the following tests. Test number one, you must file a separate return. Number two, you pay more than half the cost of keeping up your home for the year. Your spouse did not live with you in your home during the last 6 months of the tax year, and temporary absences such as military assignment, going to school, going to a nursing home, these are considered to be time spent at home. Your home must have been the main home of your qualifying child, stepchild, adopted child, or eligible foster child for more than half the year, and you must be able to claim an exemption for the child. However, you can still meet this test if you cannot claim the exemption for your child only because the non-custodial parent is allowed to claim the exemption for the child. So let's review these rules again. To be head of household, you have to be unmarried or considered unmarried. You're considered unmarried if you are not married or if you are divorced on the last day of the year. Now, even if you are married on the last day of the year, the IRS will still treat you as if you were unmarried if you file separately from your spouse, you pay over half the cost of keeping up your home, your spouse did not live with you at any time during the last 6 months of the year, the person who is qualifying you for head of household status is your child, not any other type of relative other than a descendant of your child or a foster child or a stepchild, right? But child. And then finally, that child is your dependent, and that means you are able to claim your child's dependency exemption on your return, with one exception, and that is you're not claiming your child's exemption because that exemption is being claimed by the non-custodial parent. Here is an illustration. Sylvia is married, and during the year she paid more than half of the cost of maintaining a home for herself and her 10-year-old son. Sylvia's husband did not live with her during the last 6 months of the year. Sylvia will not be filing a joint return. Sylvia also cannot claim her son as a dependent because she signed Form 8332, releasing her son's dependency exemption to her husband. Sylvia meets all 5 of these tests for being considered unmarried, and she is able to file as head of household even though she is in fact married. And the final filing status, number 5, is qualifying widow or widower with dependent child. This filing status entitles you to use joint tax rates and the highest standard deduction amount if you do not itemize your deductions. You are eligible to file your 2010 return as a qualifying widow or widower with dependent child if you meet all of the following tests. Number 1, you are entitled to file a joint return with your spouse for the year your spouse died. It does not matter whether you actually did file a joint return, though. Number 2, you did not remarry before the end of 2010. Number 3, you have a qualifying child, stepchild, or adopted child for whom you can claim an exemption. This does not include a foster child. This child lived with you in your household all year except for temporary absences. And you paid more than half the cost of keeping up a home that is the main home for you and that child for the entire year except for temporary absences. And finally, your spouse must have died in either 2008 or 2009. So what this is essentially saying is that the qualifying widow or widower with dependent child filing status is available only for 2 years and is the 2 years following the year of death. So if you are married and your spouse died in 2010, you would not use the qualifying widow filing status. That status would not be available to you until the year after the year of death, which would be 2011. So in order to use the qualifying widow filing status in 2010, your spouse must have died in 2008 or 2009. In addition, you have to pay more than half the cost of keeping up a home for you and your qualifying child. You must not have remarried before the end of the year. And when your spouse died, you should have been eligible or must have been eligible to file a joint return with your spouse. It does not matter if you actually did file the return, only that it was possible. So here are the possible filing statuses for different family situations. So this is the status choice: single, married filing joint, married filing separate, head of household, qualifying widow or widower with dependent child. And these are the actual marital situations or family situations in which you might live. If you are single, divorced, or a widow with a dependent child, you are eligible for the single filing status. If you are married filing a joint return, well, the only way you can choose that status is if you are actually married or if you are a widow and it is the year that your spouse died, or widower in the year your spouse died. Married filing separate, in order to use that status, you must be married. Head of household, in order to use that status, you must be single. In certain situations, you can be married if you meet all of the tests for being considered unmarried. You can also file as head of household if you are divorced or if you are a widow with a dependent child or a qualifying person. And finally, who qualifies for qualifying widower status? Well, only a widowed parent, and then only for the first 2 years after the year of death. So here are the possible filing statuses available on Form 1040. You can file as single if the taxpayer is single. You can file as married filing jointly if the taxpayer is married and living together or married and living apart. Married filing separately, you can use that status if you are married living together or if you are married and living apart. Head of household, you can use that filing status if you are single and you have a qualifying person, if you are divorced and you have a qualifying person, or if you are widowed and have a qualifying person, but only in the year after the year of death. And for certain people who are married, that head of household filing status is available, but only if you lived apart from your spouse for the last 6 months of the year and meet all of the other tests. And finally, if the taxpayer is widowed and has a qualifying child, then the taxpayer can file using the qualifying widow or widower with dependent child filing status. So that concludes our lecture on the 5 filing statuses. The next part of today's class is to go on and talk about decedents. But I think this would be a good time to break from the sound of my voice and do a classwork exercise. And the classwork exercise is near the back of your manual, beginning on page 21. So let's just go there. And here's page 21. Classwork assignment number 1 is to fill out these headers in your manual for the tax situations that are described in a very odd place, which is the homework assignment. And it might be a little bit confusing, but actually classwork involves part of homework, and then homework is something you're going to work on more after the class ends today. But let's flip to page 27 to see what the homework assignment is saying. And here is page 27 in the manual. It says, for some questions, only one filing status is available, and for others, there may be more than one filing status available. And the first problem involves test taxpayer. Well, for the classwork assignment, what we'd like you to do is read the scenarios for problems 1 through 10 and select the most advantageous filing status that the filer is eligible to claim. And then use that filing status and the rest of the information contained in the problem to fill out the header for the tax form 1040. So let's do the first one together, and then what I want you to do is push pause and complete the rest of the problems 2 through 10 by yourself. And when you are finished completing problems 2 through 10, then you would resume playback, and I will review the answer key with you. So beginning with problem number 1. Test taxpayer lives at 1010 10th Avenue in Beaverton. Test is married to John, but John moved out of the house in July. Test paid over half the cost of maintaining her home for her dependent child. List all of the possible filing statuses available for Test. So she's married, but her spouse moved out in July. So what are the possible filing statuses? Well, she could possibly qualify for married filing joint and married filing separate. She would not qualify for head of household because her husband moved out in July. And if her husband moved out in July, that means he was there in July. And if he was there in July, he was there during the last 6 months of the year. So she could not qualify for head of household. So her possible filing status choices are married filing separate and married filing joint. And between those two statuses, more likely than not, she'll be eligible or better off filing a joint return. So let's go fill out the header for the first problem and use that married filing joint filing status. So we're going to enter the first name, which is Test, and then move on to taxpayer as the last name, and enter that information on this line of the 1040. And of course, the Social Security number goes here. The next line on the tax form is the spouse's name, which is John. Okay, and of course, you'll put in John's Social Security number. And you can enter the address. I'm not going to do that for you. But now we have to select a filing status. And what is the most advantageous filing status for Test and John? Well, it is going to be married filing jointly in all likelihood. Now, we can think of reasons why separately could work out better, but for purposes of this problem, we're going to say that married filing jointly is the most advantageous filing status. So moving on back to question number 2. Samantha Jones is married to Mark Jones. They reside at 4013 Happy Court in California, and Samantha wants to file single because they were married in September and were unmarried for more than half the year. List all the possible filing statuses allowable for Samantha. Well, there are 2 filing statuses available for Samantha. They are married filing joint and married filing separate, and the fact that they were single for most of the year is not relevant because on the last day of the year, they were married. And so the best choice for Samantha and her new husband, Mark, is to file a joint return. So you're going to go back up to the next header in your manual and fill that out. Please push pause at this point and complete problems 2 through 10 for your classwork assignment using the information contained in the homework assignment problems 1 through 10. And when you are finished with that, please resume video playback and I will do a review of the session 1 classwork answer key with you. Okay, welcome back. You should have taken the last few minutes to quietly work on your own on filling out the headers for classwork number 1. And we are now going to review those completed headers to show you what we did when we prepared them. In front of you, I now have the answer key for the session 2 classwork number 1 assignment. And the very first problem we already did together before we started the break, but now we're looking at problem number 2. And so I'm just going to flip back and forth between the student manual and the answer key. And of course, the student manual says Samantha Jones is married to Mark Jones. They reside in San Francisco, and Samantha wants to file single. But of course, she cannot file single because she was married on the last day of the year. We have therefore chosen married filing joint as probably the most optimal filing status, or the most beneficial filing status. And so that's where we have chosen for Samantha and Mark Jones. The next problem involves the tax filer Zetta Smith. She divorced her husband in December. Zetta's 30-year-old single daughter, Beth, lived in Zetta's home all year. Beth didn't work much last year and earned only $2,500. Therefore, Beth is a qualifying relative, and Zetta can claim her as a dependent. Zetta paid more than half the cost of keeping up her home at 222 Hippity Hop Lane in Highland Park, Michigan. List all possible filing statuses for Zetta. Well, all possible filing statuses for Zetta is the homework assignment. The classwork assignment is to just figure the best or most ideal filing status for Zetta for tax purposes. And of course, she meets the qualifications for head of household. So we are going to select head of household as the most beneficial filing status for her. We enter her address. Now in problem number 4, everything's the same except that Zetta's daughter worked and earned more money and does not qualify as a dependent. And if Zetta has a person living with her who is not her dependent, then that person cannot qualify her as head of household. So she does not qualify for head of household. Since she was divorced on the last day of the year, she is going to be filing with the single filing status. Next in line is Jack Sunder. He lives at 5066 Rainy Day Lane in New York. His wife Martha died in 2009, and he takes care of his stepson Johnny Lane, age 13, who lived with Jack all year. Well, that will qualify Jack for the qualifying widow with dependent child filing status. So that is the filing status we're going to check, qualifying widow or widower with dependent child. And you will notice that we entered a date there, 2009, because that is the date of death of his spouse. Next problem is number 6. Zane Gray is single and paid over half the cost of keeping up his home in Texas, in Houston, Texas, for himself and his son Joshua, age 5. Zane's ex-wife Laura claims Joshua as dependent. List all possible filing statuses. Well, the homework assignment is to list all possible filing statuses, and actually they would be single and head of household. Those are the possible choices for Zane, and of those two, head of household is the most optimal filing status. So Zane can file as head of household. He is single and paid over half the cost of keeping up a home for his qualifying child. The fact that Zane cannot claim the dependency exemption for his son does not affect his ability to file as head of household, because the divorce or separation instrument does not affect his entitlement to head of household filing status, simply because the other spouse is claiming the child under the divorce decree. So here we enter head of household filing status. You'll notice that we've entered the child's name, Joshua Gray. The only time you enter the name of the person who qualifies you for head of household on that line is when you do not have a dependent qualifying you. So on Zane's tax return, he will not list Joshua as a dependent, but Joshua is the qualifying person for head of household. Therefore, Joshua's name appears on the line. Problem number 7. Sally Summers is married to John Summers, and Sally lived with John all year, but doesn't want to file a joint return. Sally earned most of the household income and considers herself to be the head of the household. She wants to file head of household and claim her 2 children as dependents. List all possible filing statuses allowable for Sally. Well, she's married, she lived with her husband, she has 2 choices: married filing separate or married filing jointly. And of those 2, most likely married filing jointly is going to be the most advantageous filing status. So we're going to go over to the header for Sally's tax return. We're going to enter her as taxpayer, her husband John as spouse, and we're going to select the married filing jointly filing status. Problem number 8. Sam Sanderson is married to Jill Smith and live in Memphis, Tennessee. Jill has been in a nursing home all year because she is ill. Their son John, age 16, has been at home all year. List all the possible filing statuses allowed for Sam. Well, Sam has 2 choices again: married filing separate or married filing joint. Even though his wife was not living with him at any time during the year, she stayed at the nursing home, or her stay at the nursing home is considered to be time spent at home. Therefore, she's really not away from home for tax purposes, and that means that Sam will file married filing joint. He could also file as married filing separate, but joint is the most advantageous status. Problem number 9. Sandy Peters is single and lives in San Francisco, California. She paid more than half the cost of maintaining a separate household for her mother, Jean, who qualifies as Sandy's dependent. List all possible filing statuses allowed for Sandy. Well, Sandy is single, so she could file with the status of single, but head of household is another status she does qualify for. It is more advantageous, so we're going to check the head of household filing status box. Now you'll notice we have not entered the name of Sandy's mother on line 4. That is because Sandy will be claiming her mother as a dependent, and the mother's name will appear under the dependency section. And finally, we come to number 10. Jackie Jones is married to John Jones. They live in Virginia Beach, Virginia. John is a Marine sergeant who left home in May and has been in a combat zone for the past 7 months. Jackie has a dependent child and worked part-time during the year. List all possible filing statuses allowable for Jackie. Well, what we've already said is that, again, when you've got a spouse who's temporarily away from home, that temporary time away from home is considered to be time spent at home. That leaves Jackie with not being able to claim the head of household filing status. She's eligible only for married filing joint or married filing separate, and probably married filing joint will be the most advantageous status. So since John is serving in a combat zone, he has an automatic extension of time to file and pay the taxes. It is often the case that a member of the armed forces will sign a general power of attorney authorizing his or her spouse to carry out the financial matters of running a household while they are overseas. If this were true for John and Jackie, she could file jointly even though he is not available to sign the return. Jackie cannot file as head of household even though John did not live with her during the last 6 months of the year, because the time he spent serving in the armed forces overseas is considered to be time spent at home because the absence is temporary. You should refer to publication 17, pages 20, for spouse in a combat zone for more information on this subject. And because Jackie's spouse is serving in a combat zone, she is permitted to sign her husband's return if she attaches a statement to the return which states he is serving in a combat zone and is unable to sign it himself. So here we have it, Jackie and John Jones, married filing jointly. So that concludes this review of classwork number 1 for session 2 of the basic tax course. Now we're going to move on to a review or a continuation of the next topic of the day is decedents. And we begin with the final return for the decedent. The following rules must be followed with respect to filing a tax return for a person who died during the year. Decedents are subject to the same filing requirements as living persons. It is the duty of a personal representative to file the decedent's final tax return. In some situations, it is the surviving spouse who will have to file the final return. When filing the final return, include only income earned and expenses paid prior to death. Income earned and expenses paid after death are reported on the estate return if an estate return is required to be filed, or on the return of the beneficiary to whom the right to income is passed. The decedent's name and date of death should be written across the top of the return. A personal representative may revoke a joint return election made by the surviving spouse. The personal representative may or must file a separate return within 1 year of the due date of the return, including extensions. Generally, a person who is filing a return for a decedent and claiming a refund must file IRS Form 1310 with the return. However, if the person who is claiming the refund is the surviving spouse or is a court-appointed or certified personal representative filing an original return, then Form 1310 is not needed. The personal representative must attach a copy of the court certificate showing that he or she has been appointed. A surviving spouse who is filing a joint return should write "filing as surviving spouse" in the signature section of the joint return. So let's pull up a 1040 and just see what we mean by that. So in preparing the final return for the decedent, we would fill out the return as we normally would with the name of the decedent up here. We should write the date of the decedent's death up at the top. So date of death, just say it was 6/15 of 2010. That information would also be put up at the top of the return for a person who has died. And then we move down to page 2 of the 1040 form. And on page 2, in the signature section, if you are the surviving spouse, then you would sign it for the decedent as surviving spouse. So you would sign the decedent's name, so you would enter something to this effect in the signature section. So if Sandy taxpayer is signing for her deceased spouse, she would sign it Johnny deceased by Sandy taxpayer as surviving spouse. And of course, Johnny deceased is the name I made up. It would be Johnny whatever his real last name is. So what other things are there to remember about a decedent's tax return? Well, when you're talking about a tax return for a decedent, the first rule is that decedents are subject to the same filing requirements as living persons. So when you're looking at whether a final return needs to be filed for a decedent, you would look at how much income they made for the year prior to their death, and you would see if the amount of income earned is equal to or greater than the amount shown in the table for their filing status. And whoever is responsible for handling the estate or affairs of the decedent's estate, that person is the one who's responsible for filing the final return. Now, in many cases, the person who will file that final return is the spouse. But of course, if the person is not married, it might be a child or some other personal representative that was left with that responsibility. If there is a refund showing on the final return of the decedent, generally Form 1310 has to be attached to the tax return to claim that refund. The exception to that rule is if the person who is filing that final return is the spouse or if the person is court-appointed personal representative. The surviving spouse should write filing as surviving spouse in the signature section of the joint return, just as I showed you. And finally, the decedent's name and date of death should be written across the top of the return, along with the point of fact that if the final return is a joint return, and the person who is responsible for that estate is not the spouse, then the person who is responsible for the estate can come along after that return is filed and switch the filed return from married filing joint to married filing separate. So if you recall, in the first half of today's class, we said that you can never change a married filing joint return to married filing separate after the due date of the return. Well, the exception to that is in the case of a decedent. When you're dealing with the final return of a decedent, if the spouse files a joint return, the personal representative of the estate has up to 1 year after the due date of that return to switch it from married filing joint to married filing separate. Okay, moving on to the next topic of the day is personal exemptions and dependents. Underneath the category of exemptions, one of the things I'd like you to do is to think about money. And the money amount is $3,650. That $3,650 is assigned to every single person who is a citizen or resident of the United States. If you are a citizen or a resident of the United States, this particular deduction in this amount is attached to you. And you can claim it if you are not the dependent of someone else. If you are the dependent of someone else, they get to claim that deduction on their return. So when we talk about claiming a dependent on a tax return, we're talking about claiming this deduction. And if we're talking about not being the dependent of another filer, then we are saying we get this deduction for ourselves, and no one else can get it for us. Now, for all of the history of exemptions, at least that I can recall, exemption deductions have phased out when a taxpayer's income got to be high enough. For 2010, that phase-out has ended. And so in 2010, regardless of your income, you will continue to be allowed to claim this full $3,650 for your exemption and the exemption of any dependents that you claim. That phase-out or reduction in the phase-out was supposed to be for 2010 only. However, it has been extended through 2011. And what this means is that the phase-out or the reduction of the phase-out is not in play for 2010, 2011, or even for 2012. So for the next 2 years after 2010, there will be no reduction in the deduction. But after 2012, the deduction should phase out again unless future tax law changes prevent that. Now, there are two types of exemptions to be concerned with. They both are worth $3,650 each. But one of them is associated with the taxpayer and the spouse on a tax return, and the other is associated with dependents. When we talk about claiming an exemption for a dependent, we have to categorize our dependent as either being a qualifying child or a qualifying relative. In other words, if we want to claim this $3,650 deduction for a person whom we are calling our dependent, then to be our dependent, that person must be either a qualifying relative or a qualifying child. So let's talk about personal exemptions first, because we did say there are two types of exemptions, personal spousal and then dependency. Well, personal is the one we're going to talk about first. So if you are single, you can claim your own personal exemption if you are not the dependent of someone else. If another taxpayer is entitled to claim you as a dependent, you cannot take an exemption for yourself, even if the other taxpayer does not actually claim you as a dependent. Well, this is an interesting rule because a lot of times I have tax clients come into me during the tax season and they'll say something like, oh, my son is filing independent this year. He's going to be claiming his own exemption. I won't be claiming him as a dependent. And I'll say, okay, that's nice. Now, can you please tell me if your child is providing half of his or her own support or whether you're still providing the majority of the support? And my tax client will say, well, he had a summer job at a gas station. You know, he earned a couple $1,000s over the summer, but he's going to claim himself. And my answer back from that is, well, since you're supporting him, he's not allowed to claim himself. You should claim him, but even if you don't claim him, he cannot claim his exemption because he does not meet the tests for claiming his own exemption. Those tests being that he is not the dependent of someone else. So Dependency is not something you can choose not to be. You either are a dependent or you are not a dependent. If you are a dependent, you can never claim your own personal exemption. Married. You are generally allowed one exemption for yourself, and if you are married filing a joint return, one exemption for your spouse. You may claim an exemption for your spouse on a married filing separate return only if your spouse had no gross income and was not the dependent of another taxpayer. So how would that work out? Well, let's just suppose that you have a married couple and you've got the husband and the wife. The husband worked all year, supported the wife, but the wife's mad at the husband and does not want to sign a joint return. She refuses. So the husband is left with no recourse other than to file married filing separate. But the wife had no income, did not work. He supported her. Well, your spouse can never be your dependent, so he wouldn't be able to list the spouse in the dependency section of the 1040, but he could still claim a spousal exemption by checking the extra exemption box on the 1040. So let me just show you what I mean by that. I'm going to go back to the 1040 form, and we're looking on page 1 of the 1040 form at the boxes where we toggle whether or not we are claiming a dependent and also whether or not we're claiming an exemption. And if we look right here, it says you can enter or check this box if you are claiming an exemption for yourself, and you check this box if you are claiming an exemption for your spouse. So even if you are filing married filing separately and you've checked the married filing separate box right here, you could still go down and check this box for yourself and this box for your spouse if your spouse did not file a return with anyone else, is not the dependent of anyone else, and had no gross income. And then, of course, over here you would enter 2 rather than 1 exemption. Death. If your spouse died during the year, you can generally claim your spouse's exemption under the same rules that apply to married people. If you remarry during the year, however, you cannot claim an exemption for your deceased spouse. However, if you have no income, your exemption may be claimed by both your new spouse and your deceased spouse on their married filing separate returns. Well, didn't I just finish telling you up here that there's only one $3,650 deduction per person? Well, there is one exception to that rule, and that rule is if you happen to be married to someone who died and you had no income, and then you marry someone else who also has married someone else, and you still have no income, and you don't file a joint return with your new spouse, then your new spouse and your deceased spouse can both claim your exemption on their returns. Divorced or separated spouse. If you obtained a final decree of divorce or separation by the end of the year, you cannot claim your former spouse's exemption. This rule applies even if you provided all of your former spouse's support for the year. Dependents. Determining who qualifies as your dependent should be simple. However, it is often confusing. Correctly determining whom you can and whom you cannot claim as a dependent is one of the most important areas of the tax return. There is one test for yourself and tests for each type of dependent. All of the tests must be met, or you cannot claim an exemption for that person. So the dependency tests are more difficult to learn than the tests for claiming your personal exemption on the earlier page. Now we're getting into some very specific rules, and like head of household, these rules can seem to be similar enough to maybe get you to think you've got it right. At the same time, a subtle difference can mean, no, you can't claim this person as a dependent. So really, there are 2 different ways that you look to claim a dependent. Either you have a qualifying child or you have a qualifying relative. Again, determining who qualifies as your dependent should be simple. However, it is often confusing. And correctly determining who you can and who you cannot claim as a dependent is one of the most important areas of the tax return. There is one test for yourself, plus there are additional tests for each type of dependent. You must meet every single test in order to claim a person as a dependent. The dependency test for yourself. You cannot claim any dependents if you or your spouse, if filing a joint return, could be claimed as a dependent by another taxpayer. Dependency test for a qualifying child. To claim an exemption for a qualifying child, you must meet all 7 of these tests: joint return test, citizen or U.S. resident test, relationship test, age test, residency test, support test, and special test for qualifying child of more than one person. Let's look at the joint return test first. You generally cannot claim an exemption for your dependent if he or she files a joint return. However, if your dependent files a joint return merely to claim a refund and no tax liability would exist for either spouse on their married filing separate returns, then you can still claim your dependent's exemption. So let's stop and take a look at the 1040 and see what we mean by that. We have a dependent who is filing a joint return. Okay, and that dependent is filed a married filing joint return. So the dependent has checked this box on a married filing joint return and is filing a joint return with their spouse. The question is, can we claim our child's exemption even though our child filed a joint return with their spouse? The answer is generally no. As a general rule, no, but if your dependent files a joint return for the sole purpose of getting a refund, and there would be no tax on line 60 of the return, either on the joint return or the married filing separate returns of either of the individuals that are filing jointly, then you can still claim your child's dependent. So let's just suppose the child has a tax liability on line 60 of $500, okay? And this individual has $1,000 of withholding on line 61. Well, how it would look when this child's return or joint return is filed is it would say that they have a $500 refund. Their tax bill is $500, they had $1,000 withheld, so they have a $500 refund. And on the surface, it may look to be the case that in this situation, if your child filed a joint return with $500 of tax and $1,000 of withholding, that the tax would be 0 and you could still claim their dependency. The answer is no, that is not the case. We need line 60 to be 0. If line 60 is 0 on that joint return, and on each of the married filing separate returns, if they chose to file that way instead, the tax would still be 0 for each of them. That is the only situation where your child or your dependent can file a joint return and still be claimed by you as a dependent. So just as a recap, joint return test says that your dependent cannot file a joint return with one exception, which is if your dependent filed a joint return and the sole purpose of filing a joint return was a claim for refund, and no tax appears on line 60 of the joint return, and if they filed separately, there would still be 0 tax on each of their separate returns, then you can still claim your dependent's exemption even though your dependent filed a joint return. Citizen or resident test. For some part of the calendar year, a person must be a U.S. citizen or resident, or a resident of Canada or Mexico. Relationship test. To meet this test, a person must be your child, grandchild, great-grandchild, etc. But stepchild. Note that a stepchild is a child of your spouse. A child of your boyfriend or girlfriend is not your stepchild. Eligible foster child can also meet the relationship test if that child was placed with you by an authorized agency. If an authorized agency placed the foster child with you, then the foster child is considered to be your child for tax purposes and is related to you. And finally, brother, sister, half-brother, half-sister, stepsister, stepbrother, or a descendant of any of them, such as a niece or nephew, meets the relationship test. Age test. To meet this test, a child must be under age 19 at the end of the year and younger than you or your spouse if filing jointly, or a full-time student under the age of 24 at the end of the year and younger than you or your spouse if married filing jointly, or permanently and totally disabled at any time during the year regardless of age. Here is an example. Your 23-year-old brother who is a full-time student and unmarried lives with you and your spouse. He is not disabled. Both you and your spouse are 21 years old and you file a joint return. Your brother is not your qualifying child because he is not younger than you or your spouse. Residency test. To meet this test, a child must have lived with you for more than half of the year. There are exceptions for temporary absences due to illness, education, business, vacation, or military service, the death or birth of the child during the year, and a kidnapped child if all of the following are true. That is, that the child is presumed by law enforcement officials to have been kidnapped by someone who is not a member of your family or the child's family. In the year the kidnapping occurred, the child lived with you for more than half of the part of the year before the date of the kidnapping. There is no determination in a prior year that the child is dead, and the child would still be under age 19. Number 4, children of divorced or separated parents. This rule applies to parents who are never married as well. So we're talking about the residency test. To meet these tests, the child must have lived with you for more than half the year with these exceptions: temporary absence, death or birth during the year, kidnapping, and divorced or children of divorced or separated parents. Under this rule, even if the parents were never married, this exception can be met. A child will be treated as the qualifying child of the non-custodial parent if all of the following apply. The parents are divorced or legally separated under a decree of divorce or separate maintenance, separated under a written separation agreement, or lived apart at all times during the last 6 months of the year. The child received over half of his or her support for the year from the parents, and the child is in the custody of one or both parents for more than half the year, and a decree or written agreement that applies to 2010 provides that the non-custodial parent can claim the child as a dependent, or the custodial parent signs a written declaration, Form 8332, or similar statement stating that he or she will not claim the child as a dependent for the tax year. So again, let's take a look at what's happening with this rule. It's the residency test rule. And if you have a qualifying child, the residency test states that that child must live with you for more than half the year. The exceptions to that rule are: the child is temporarily away from home, the child was born during the year or died during the year, the child was kidnapped. In the case of divorced or separated parents, the child can be claimed by the non-custodial parent if it can be shown that both parents together combined at least half of the support, or provided at least half of the support, and that the child was in the custody of one or both parents for more than half the year, and that the non-custodial parent gets written permission from the custodial parent to claim that child's exemption, or there is a divorce decree that awards the exemption. Support test. To meet this test, the child cannot have provided more than half of his or her own support for the year. To see what is or is not support, you should refer to publication 17, page 31, under support test to be a qualifying relative. Note that if a child is supported by state welfare, housing, or other benefits, such support is considered to be support provided by a qualifying relative, but is not considered to be support provided by a qualifying child. Special test for qualifying child of more than one person. If you and another person have the same qualifying child, you and that other person can decide which of you will be treated as treat the child as a qualifying child. That person can take all of the following tax benefits, provided that person is eligible for each benefit based on the qualifying child. And these include the exemption for the child tax credit, the head of household filing status, the credit for child and dependent care expenses, the exclusion from income for dependent care benefits, and the earned income credit. The other person cannot take any of these benefits based on this same qualifying child. In other words, you and the other person cannot agree to divide these benefits between you. So what this is saying is it's possible in the same household to have two people who both qualify to claim a child. In other words, you have an individual child who is the qualifying child of two people. And which person is going to claim that child? Well, let's just suppose it's decided that this person will claim the child. If this person is claiming the child, then it means this person claims the child for everything, and the other person cannot claim the child for anything at all. Now, here's the deal. Let's just suppose, I'm just going to pull up a whiteboard here. Hang on. Just give myself enough space to write some stuff out. Let's just suppose we have two people, Jack and Samantha, who are not married, okay? And Jack earned $30,000 for the year, and Samantha earned $20,000 for the year. And they essentially live together in the same house, and they have a child named Jack, or Johnny, okay, age 12. So we got Jack and Samantha who are not married. Jack earned $30,000, Samantha earned $20,000. They have a child named Johnny, age 12, and Johnny lived with both of them all year. Now, who's going to claim Johnny? Well, the reality is, under the rules for qualifying child, Johnny could be claimed by either Jack or Samantha. Now, there are some tiebreaker rules I'm going to get into in a minute, and under those tiebreaker rules, Jack will win. But Jack could agree to let Samantha claim Johnny. If Jack agrees to let Samantha claim Johnny, then it means Jack will claim, or Samantha will claim Johnny for all of these benefits, including claiming the exemption for the child tax credit, the head of household filing status, the credit for child independent care benefits, and the earned income credit. Now let's just suppose that based on her income, Samantha cannot show that she paid more than half the cost of keeping up the household. So she does not qualify for the head of household filing status. Well, if that's the case, she would not qualify for head of household, and Johnny would not be, or Jack would not be able to file as head of household either. The reason Jack cannot file as head of household is that he has given up that individual who could qualify him for that status. So when you give away a dependency exemption to another person, you give away every benefit that goes with that exemption. Now, there are some tiebreaker rules that I didn't mention, so let's take a look at those. If more than one person files a joint return, claiming the same qualifying child, and only one of those persons is the qualifying child, then the child will be treated as the qualifying child of the parent. So the first rule to remember about tiebreaker rules is, in the previous example, I showed you a situation where we have two individuals. They are both parents of the same child, and one has more income than the other. Well, under the tiebreaker rules, we're going to see that the person with the higher income wins. But what if one of the persons is the child's parent and the other is a grandparent, or one of the persons is the child's parent and one is an aunt or uncle? Okay, what then? Well, if only one of the person's if only one of the persons is the child's parent, then the person who wins under the tiebreaker rules is the parent. Now, it could be the case that the parent will allow the other person who loses under the tiebreaker rules to claim the child's exemption, but the parent must agree to do so in writing. Now, if two of the persons are parents of the child and they do not file a joint return together, then the parent with whom the child lived for the longer period of time during the year will claim that child. So let's suppose we've got both parents who want to claim the same child. They're not filing a joint return. Who wins? Well, the parent who lived with the child the greater period of time wins. Now, if two of the persons are parents of the child, they do not file a joint return together, and the child lived with each parent the exact same amount of time during the year, then the parent with the higher adjusted gross income wins. So you saw under that earlier example with Jack and Samantha, Jack's earning Jack's earning $30,000, Samantha is earning $20,000. Under those conditions, Jack wins under the tiebreaker rules. But let's just suppose that the child Johnny lived with Samantha for 8 months of the year and lived with John or Jack for only 4 months of the year. Well, under those rules, the parent with the greater custody will win, even though they had lower income. Now, if none of the persons are the child's parent, the person with the highest AGI wins, And if either parent can claim the child but does not, then the person with the highest AGI will claim that dependent as long as the AGI of that person is higher than the AGI of the highest AGI of the parents. So that's another confusing rule. Let's go up here and open up that whiteboard again. So here we have Jack and Samantha, who are not married. Jack earned 30, Samantha earned 20. They have a child, Johnny, age 12. Let's just suppose that during the year, Jack and Samantha, who are not married, lived with Samantha's mother. Okay? And Samantha's mother earned $40,000. Now, under the rules for determining whether or not we have a qualifying child, Samantha's mother has a qualifying child. His name is Johnny. Under the tiebreaker rules, Johnny's exemption would go to Jack first because he is a parent who had the higher income. Then under the tiebreaker rules, it would fall to Samantha next because Samantha is the parent of Johnny and she also lived with him all year. The very last person in line is Samantha's mother. She had the highest income, but no matter what, she cannot win under the tiebreaker rules unless both Jack and Samantha agree to release that exemption to Samantha's mother. Samantha's mother would be allowed to claim the child's dependency exemption in that situation because she earned more money than either Jack or Samantha. But if Samantha's mother earned, say, $29,000, she would not be allowed to claim the dependency exemption for Johnny because her income would then be less than Jack. So going back to our manual again, dependents of divorced or separated parents. As a reminder, beginning with 2009 returns, a custodial parent is the parent with whom the child spends the greatest number of nights during the year. In an instant where the child spends an equal number of nights with each parent, the custodial parent will be the one with the highest AGI. A non-custodial parent claiming an exemption for a child can no longer attach pages from a divorce decree or separation decree instead of Form 8332 if the decree or agreement went into effect after 2008. For divorced or separated individuals who have agreements that went into effect after 2008, the following provisions apply to a non-custodial parent who claims an exemption for the child. Firstly, the non-custodial parent must attach Form 8332 or a similar statement to the tax return that is signed by the custodial parent. And the signed statement must have the sole purpose of releasing a claim to that child's exemption. The non-custodial parent must attach the required information even if it was filed with the return in an earlier year. So what that's saying is Form 8332 or its equivalent has to be attached to the return of the non-custodial parent every year. Revocation of release of claim to exemption for child by the custodial parent. For tax years beginning after July 2, 2008, the 2009 calendar year for most taxpayers, new rules apply which allow the custodial parent to revoke a release of claim to exemption that was previously released to the non-custodial parent on Form 8332, release or revocation of release of claim to exemption for child by custodial parent, or a similar statement. The revocation is effective no earlier than the tax year following the year in which the custodial parent provides or makes reasonable efforts to provide the non-custodial parent with a written notice of revocation. Therefore, if the custodial parent provides a notice of revocation to the non-custodial parent in 2010, the earliest tax year the revocation can be effective for is the tax year that begins with 2011. Use Part 3 of Form 8332 to revoke a release of exemption for the next year. If you are the custodial parent who released and then revoked the release to an exemption for your child, you must attach a copy of the revocation to your return for each tax year you claimed the child as a dependent as a result of the revocation. And here is Form 8332. It's a pretty straightforward, simple form. It asks for the name of the non-custodial parent and the Social Security of the non-custodial parent. Remember that this form is attached to the tax return of the non-custodial parent. the form is filled out this way. I agree not to claim an exemption for, and you would enter the child's name, and then you'd enter the tax year that it applies to. And then the custodial parent signs, enters the Social Security number of the custodial parent, and then dates. At the time that a parent, it cannot be revoked except child. Under earlier rules, we're talking 2005 and earlier, in Publication 17, the IRS had a table that looked a lot like this. Then what happened was in 2005, the rules for defining a dependent changed dramatically. And when the IRS changed those rules, and it wasn't actually the IRS that changed them, it was the federal government changed them, and then IRS had to rewrite Pub 17 to accommodate the new rules, IRS did away with the flow chart. And I always liked the flow chart. For me, it made it really straightforward. You just went step by step through the flow chart. And IRS instead replaced this flow chart with a table. And I'm going to just show you Pub 17 for a quick second here, because Pub 17 is where we now have a table instead of a flow chart. And you may decide that you prefer the table, and that you don't find my flow chart particularly helpful at all. But I personally liked the table when it was available, and I wanted to continue to make that table available to my tax school students. So I'm just going to flash through in the IRS Pub 17 until I get to the point on dependents where I can show you the table. And it was right here. So here we have the table, test to be a qualifying child. And in order to be a qualifying child, you must first meet all of these requirements here, and then you go down and you have to meet 5 more requirements here, and then down at the bottom it has exceptions. There are exceptions. And then on this side of the table it says test to be a qualifying relative. You have to meet all of these tests up here just as you did for qualifying child, and in addition you have to meet these other 4 tests in here. So you may find that you find this table very helpful and it does everything for you that you need it to. I personally prefer the flow chart. So to give you the best tools as a student for learning, we're going to give you both today. So here is the flow chart. Qualifying child dependency flow chart. And what I've done with this flow chart is I'm putting all of the tests in order, and you're taking each test one at a time, and as soon as you flunk a test, you're out and you don't have a dependent. You have to go through the entire flow chart successfully in order to claim that dependency exemption for that qualifying child. The first test is the dependent taxpayer test. It says, are you the dependent of another person? If the answer is yes, you are out. You cannot claim this person as your qualifying child because you are the dependent of someone else. So if you do answer no to that question, then you move on to the next test, which is the joint return test. Did the child file a joint return for the year, unless that return was filed only as a claim for refund? The answer must be no. And if it is, you move on to the next test, which is the U.S. citizen or resident test. Was this child a U.S. citizen or a resident of Canada or Mexico for any part of the year? The answer must be yes. If it is, you move on to the relationship test. Was your child, grandchild, stepchild, brother, sister, niece, nephew, or a descendant thereof, or your eligible foster child? The answer must be yes, and if it is, you move on to the age test. Was the child under age 19 and younger than you or your spouse if married filing joint, a full-time student under age 24 and younger than you or your spouse if married filing joint, or any age and permanently and totally disabled on the last day of the year? The answer must be yes. If it is, you move on to the next test, which is the residency test. And there are exceptions, which we've already talked about, but in general, did the child live with you for more than half the year? The answer must be yes. If it is, we move on to the support test. Under the support test, it says, did the child provide more than half of his or her own support? If the answer is no, then you move on. If the answer is yes, you can't claim your child because your child supported himself and you flunked that test. So you have to be able to show that your child did not support his or herself, and if your child did not support his or herself, Then you move on to the next test, which is a special test for a qualifying child of more than one person. And it states, is your child the qualifying child of another person? If the answer is no, you're done, and you are able to claim your child as a qualifying child. If the answer is yes, the child could be claimed by someone else because the child is the qualifying child of someone else, then we move on to the tiebreaker rules. And the first tiebreaker rule is, does the other person agree to allow you to claim that child's exemption? If they agree, you get the kid. If they don't agree, you're out. Now, well, maybe. You're not out if you win under the tiebreaker rules. So if they do not agree to let you claim that child's exemption, then you can go down here and see if you can force them into allowing you, because they have no choice. And they have no choice if you win under the tiebreaker rules. You win under the tiebreaker rules if you are a parent and you have more income and you had shared amount of custody. But if you are a parent and the other parent had greater custody than you do, you lose. And if you are the parent and any other person could qualify to claim that child, you're going to win because you're the parent. So those are the tiebreaker rules that we went through earlier, and you, of course, have to think through them for each individual situation. Okay, so those are the rules for qualifying child. Now, even if you cannot show that you have a qualifying child, you may still have a qualifying relative. And the rules for qualifying relative are similar, but sometimes different than the rules for qualifying child. Instead of 7 tests, for example, we now have 6 tests. The first of those tests is the joint return test. Then we move on to the member of household or relationship test, the citizen or resident test, the gross income test, the support test, and the not a qualifying child test. Now let's just maybe make a sentence out of all of this. Joint, I corresponded that to Joe. Member of household relationship test, that is must. Citizen or resident test, come. Gross income test, get. Support test, supper. Not a qualifying child test, now. So a good way to remember these 6 tests would be to just take the phrase, Joe must come get supper now. You may think that's a really silly way to remember, or you may think it's great. It's just a learning tool for you if you'd like to try using it. Joint return test. You generally cannot claim an exemption for your dependent if he or she filed a joint return. However, if your dependent files a joint return merely to claim a refund and no tax liability would exist for either spouse on their married filing separate returns, then you can still claim your dependent's exemption. Citizen or resident test. For some part of the calendar year, a person must be either a U.S. citizen or resident, or a resident of Canada or Mexico. Member of household or relationship test. To meet this test, the person must either live with you the entire year as a member of your household or be related to you in one of the following ways. Now, earlier when we talked about qualifying child, the relationship was essentially that of parent to child, or parent to grandchild, or parent to stepchild, or parent to foster child. It had to be a parent-child relationship to have a qualifying child. Under qualifying relative, you do not have to have that parent-child relationship. All different kinds of relationships can still qualify you to have a qualifying relative. And to have a qualifying relative, you have to have a person who lived with you as a member of your household or the entire year, or they are related to you. They are considered to be related to you if they are related in any of the following ways: child, grandchild, great-grandchild, etc. Stepchild. But remember, a stepchild is a child of your spouse. A child of your boyfriend or girlfriend is not your stepchild. And you'll see this is the second time I've stated that in the manual, and the reason that it's in there is because on a regular basis over the years, I've had clients come in and sit down from me and present me with the Social Security number of their stepchild and said, well, I'm claiming my stepchild on my return this year. And I'll go, okay, well, your child has a different last name than you. And then I'll say, you know, since your child has a different last name from you, can you explain to me where the other parent is? And you know, why the child's name is different than yours? And the answer could come back, well, we've never been married. So you may live together as husband and wife, but if you never actually married, then you're not the step parent of your boyfriend or girlfriend's child. And so you would not be considered to have a person who is your qualifying relative for those purposes. Now, the son or daughter of your boyfriend or girlfriend could still be a member of your household, however. And if that person was a member of your household for the entire year, they could still be your qualifying relative, but only if they were not the qualifying child of the parent first. So this is kind of a lot to get your head around. But remember, under the qualifying child rules, we stated that a person is your qualifying child if they meet all the tests for being a qualifying child. And one of the tests that we have is that you cannot be the qualifying person of another filer. But another test that we have is that your child, actually when we get to the member or the qualifying relative test, one of those tests is that your qualifying relative cannot be the qualifying child of another filer. So if we have a situation where boyfriend and girlfriend live together, and let's just say the girlfriend has a child, and the boyfriend wants to claim that child, if that child is the qualifying child of the girlfriend, no matter what, the boyfriend cannot claim that child. But if the girlfriend has no income and is in fact a dependent of the boyfriend, then the boyfriend could claim both the girlfriend and the girlfriend's child as his dependents under the member of household rule, as long as they lived with him the entire year and meet all of the other tests, of course. So, to be related to you, a person must be related in one of the following ways: your child or a lineal descendant of your child, a stepchild, eligible foster child if that person was placed with you by an authorized agency, a brother, sister, half-brother, half-sister, stepbrother, or stepsister, a parent, grandparent, or other direct ancestor, but not a foster parent, stepmother or stepfather, brother or sister of your parent, that is your aunt or uncle, or a son or daughter of a brother or sister, that is a niece or nephew. Father-in-law, mother-in-law, daughter-in-law, son-in-law, brother-in-law, sister-in-law. Those are all relationships that meet the relationship test. There's also some special notes here about relationship. The following specific rules apply to relationship. Number one, any relationship established by marriage is not ended by death or divorce. So this means your in-laws will remain your in-laws for tax purposes, even in death or divorce. Before legal adoption, a child is considered to be your child once they are placed with you by an authorized agency. An eligible foster child meets the relationship test and does not need to live with you to qualify as your dependent. Your cousin does not meet the relationship test and must live with you as a member of your household for the entire year. A person who died during the year but was a member of your household until they died will meet the member of household test. In this situation, the decedent is considered to have been a member of your household for the entire year. And finally, a child who was born during the year will meet the member of household test if he or she lived with you for the remainder of the year that they were alive. Bear in mind that a required hospital stay is considered to be time spent in your household if the child would otherwise have been a member of your household. A child born during the year is considered to have lived with you for the entire year. Next test is the gross income test. You generally cannot claim an exemption for your dependent if he or she had gross income of $3,650 or more during the year. However, gross income does not include tax-exempt income such as certain Social Security payments or payments received by a permanently and totally disabled person for services he or she performs at certain sheltered workshops, or scholarships received by a degree candidate that are used for tuition fees, supplies, books, and equipment required for a particular course. The next test is the support test, and we had a support test under qualifying child. And under the qualifying child rule, the child cannot have provided more than half of his or her own support. There's nothing under the qualifying child support test that says you have to support the child, only that the child cannot have supported him or herself. But under the support test for qualifying relative, now you have to show that you provided more than half the total support during the year for the person that you are claiming an exemption for. It does not matter if the money you provide for support comes from savings or earnings or from money you borrow, so long as the money is spent on support during the year. So what kind of things are considered to be support? Well, all of the following sources of support have to be considered for the support test, including tax-exempt income, such as certain Social Security benefits and military housing allowances used for that person's support. Foster care payments you receive from a state or federal agency for the care of an individual are considered to be amounts provided by the state and not by you. If you are in the trade or business of providing foster care, your unreimbursed expenses are not considered to have been provided by you. Support provided by the state, food stamps, housing, etc., must be considered when factoring support, unless it can be shown that the benefits were not used for that purpose. A person's own funds that are spent on support must be included in total support. A child's wages that are spent on support must be included in the support of that child. And the fair market value of free rent must also be a factor in support. So let's see what we mean by the fair market value of free rent. Let's just suppose we have a situation where you are supporting your parent, okay? But your parent lives in their own home, and they own it free and clear. So you're essentially paying the property taxes, the utilities, buying food for your parent, giving them spending money, buying them clothes, maybe paying their medical bills for them, and so forth. Are you paying more than half of your parent's support? Well, you're going to have to figure what the fair rental value of your parent's house is. So if the fair rental value of the home is $10,000 per year, then you're going to have to be able to show that you spent more than $10,000 on your parent's support. All right, next what is not included in support. The following expenses are not considered to be used for support. Federal, state, and local income taxes paid by persons from their own income. Social Security and Medicare taxes paid by persons from their own income. Life insurance premiums, funeral expenses, scholarships received by your child if your child is a full-time student, and survivors and dependents educational assistance payments used for the support of the child who receives them. So all of these items are amounts that are not considered to have been used for support. And all of these amounts up here are amounts that are used to consider or figure whether or not you provided more than half of your dependent's support. So to determine total support, it can be helpful to use a worksheet that the IRS provides in Pub 17 for this very purpose. You'll find it on page 33 of Pub 17. And it's divided into sections. The first part at the top says, enter the total funds belonging to the person you supported. Include income that they received, both taxable and non-taxable, and amounts that they borrowed during the year, plus the amount they had in savings and other accounts at the beginning of the year. Out of all of the money or income available on line 1, enter the amount of that money that was used for support of the dependent. And then enter the amount that was used for other purposes. And then show the amount that was in their savings account at the end of the year. So what they're saying is if you have a dependent who has money available or financial resources available to them, you have to account for that money. You then go down to the next category, which is to look at your household as a whole. How much does it cost to maintain a household? Well, let's just suppose I have a family of 4. There is me, and I'm supporting my mother and 2 other children. And am I providing support for that household? And if so, how much am I providing for the support of the household? Well, let's just suppose I'm paying virtually all of the costs of supporting the household. And that includes the cost of the lodging, the cost of food, the cost of utilities, the cost of repairs, any other expenses that are really associated with keeping up a household. Well, now what I have to do on line 12 is enter the number of people who lived with me in that household, because when I pay to keep up a household for myself and 3 other people, I'm really paying for the support through supporting the household of 4 people, and not just the 1 person that I'm passing under the support test up here. Next stage is to look at the expenses that are directly reallocable to the person I'm supporting, and that would include things like their clothing expenses, their education expenses, their medical and dental, travel and recreation. And how much did I provide directly for that person's support on those areas? And finally, the final step is to see, did I provide more than half? So we have money that could have been provided by my dependent for my dependent support. There's also money that I may have provided for my dependent support, and then there's money I may have provided for supporting the entire household. The purpose of this worksheet is to finally establish whether I paid more than half. So let's go through a flow chart that I created for qualifying relative. It's a little bit simpler than qualifying child, but we still need to go through it. So qualifying relative dependency flow chart. The first test is the dependent taxpayer test. Are you the dependent of another person? Because if you are, you cannot have a qualifying relative. If you are not the dependent of another person, we move on to the joint return test. Did that person file a joint return for the year? The answer must be no. And if it is, you move on to the U.S. citizen or resident test. Was the person whom you want to claim as a dependent a U.S. citizen or resident, or a resident of Canada for any part of the year? The answer must be yes. And if it is, you move on to the next test, not a qualifying child. Is the person the qualifying child of you or another person? The answer must be no. If it's yes, you do not have a qualifying child. And if this person is your qualifying child, then you're still going to get their dependency. You're just going to qualify to claim that person as a qualifying child rather than as a qualifying relative. So is this person not your qualifying child and not the qualifying child of anyone else? If they are no one else's qualifying child, then you move on to the next test, member of household or relationship test. Was this person a member of your household for the entire year or related to you? This is a test that gets people, that is tax preparers, confused, because tax preparers will focus on the relationship test and forget about the member of household test. And then they'll focus on the member of household test when they should be looking at the relationship. Under member of household or relationship test, a person who is related to you does not have to live with you at all. But if they are not related to you, then they must live with you as a member of your household for the entire year. If they pass that test, we move on to the gross income test. Did the person have gross income of $3,650 or more for the year? If they did, you are out and you cannot claim their dependency exemption, at least as a qualifying relative. And then we move on to the support test. Did you provide more than half of this person's total support for the year? The answer must be yes, and if it is, you do have a qualifying relative. Some additional notes here before we move on to our next classwork assignment of the day. We are on a multiple support agreement now. A multiple support agreement allows you to claim a deduction for a person who was supported more than 50% by 2 or more persons, none of whom provided more than half of the support individually. To qualify to claim a dependent under a multiple support agreement, all of the following must be true. Any dependent who meets all of the other tests to claim an exemption for the dependent, or any person who meets all of the other tests to claim an exemption for the dependent and provided more than 10% of the support, is eligible to claim the dependency. However, you must agree who will actually claim the exemption on his or her return. Those persons who qualify but are not claiming the dependency exemption must agree to relinquish their right to claim the dependency exemption by signing a statement agreeing not to claim an exemption for the year. The person who claims the exemption must keep the signed statement for his or her records. The person who claims the exemption must also identify each of the others who were eligible to claim the exemption but agreed not to on Form 2120, Multiple Support Declaration, and then attach that form to his or her return. So here we have Form 2120, Multiple Support Declaration. On the form we enter the eligible person's name and the Social Security number and address. And essentially then that eligible person who could have claimed but is electing not to claim will sign the form. And it says, I have a signed statement from each eligible individual waiving his or her right to claim this person as a dependent. These are the eligible persons. These are their addresses and Social Security numbers. Some additional notes that you should remember about claiming dependents. One of them is that you have to have Social Security number for your dependent. You must provide the Social Security number of every dependent you claim an exemption for. If your dependent does not have a Social Security number, you must provide the individual tax identification number or adoption taxpayer identification number. If you fail to provide one of those 3 numbers for your dependent, the IRS will disallow your dependency exemption. If you do not have an identification number for your dependent, Then you must apply for the number and wait to receive it before claiming your dependent's exemption on your return. Child born and died during the year. If your child was born alive and then died during the year, and you do not have a Social Security number for the child, you may attach a copy of the child's birth certificate instead. If you do, enter died in column 2 of line 6C of your Form 1040 or 1040A. Child tax credit. The child tax credit is a credit that can reduce your tax. For 2010, the credit is $1,000 for each qualifying child. You claim the credit on line 51 of Form 1040 or line 33 of Form 1040A. A qualifying child must be all of the following in order to qualify you for this credit. That is, the child must be your son, daughter, stepchild, foster child, brother, sister, stepbrother, stepsister, or a descendant of any of them. For example, your grandchild, niece, or nephew. And this person must be under age 17 at the end of 2010, did not provide more than half of his or her own support, lived with you for more than half of 2010, is claimed as the dependent on your return, and was a U.S. citizen, U.S. national, or a U.S. resident alien. This is an interesting point here. Under the qualifying child test, your child must live with you. Under the qualifying relative test, they do not need to live with you as long as they were a resident of Canada, or they were a U.S. citizen, or they were a resident of Canada, the United States, or Mexico. But for the child tax credit, that person whom you claim as a dependent must be a U.S. citizen, U.S. national, or a U.S. resident alien. So if you have a dependent who lived in Mexico all year who was not a U.S. national or resident, then they could qualify you as a dependent or qualify as your dependent, but they would not qualify you for the child tax credit. So I just did want to go briefly back to this child tax credit and point out to you where we claim that credit by pulling up the 1040 form. So when it comes to claiming the child tax credit on a tax return, we have to claim the child's dependency exemption first. So on line 6C, we would enter the name of the person who is qualifying us for the child tax credit and obviously dependency at the same time. So we'd enter their name, their Social Security number, the relationship to us, and then if they qualify for the child tax credit, we're going to check this box 4 in line C. Then what happens is if we do have a qualifying child for the child tax credit, then we're going to go over and we're going to enter the amount of child tax credit that we qualify for on line 51. I should point out that the child tax credit that we do claim on line 51 cannot be more than the tax that we show on line 46. So we're not really into credits at this point. We'll be getting to those later on in the course, but it's just a rule to point out to you that you do have to have tax showing on line 46 before you can claim any of these credits. And one of these credits is the child tax credit. And the child tax credit on line 51 cannot be more than the tax shown on line 46 minus other credits. Okay, that concludes the lecture portion of session 2. It is now time to go in your student. Okay, now it is time to move on to classwork assignment 2. We are done with today's lecture. And the last piece for you to do before we end this class is to take a look at the questions that appear on page 24 of your student manual. At this point, what I'd like you to do is push pause and then work your way through questions 1 through 10 in your student manual. And when you are finished problems 1 through 10, please resume playback for a review of the session 2 classwork answer key for class. Okay, back from break. You should at this point have completed classwork number 2. And it has occurred to me that I have not yet given you any passwords for the password test other than the first password of the day, so I wanted to give that to you. And the password for today is showing up on the screen in front of you. The first password is not associated with a test, and that is Lone Ranger. And the second password is the password that you will use to unlock the classwork 2 or the session 2 classwork answer key. So Lone Ranger is the password for the day that is not associated with a test. You will use that for the password test, but you will not use it to open any answer keys. then the password Battlestar is the password that you will use to open up the classwork answer key for session 2. And earlier today I gave you another password, and that password was used to open the session 1 homework answer key. And that password was, of course, Perth. So I have now given you 3 passwords for the day. The first password was Perth, the second password was Lone Ranger, and the third password was Battlestar. And you will need all 3 of those passwords to pass the password test, but only Battlestar and Perth actually open any answer keys. So this classwork number 2 for today really revolves around the filing requirements and purpose of Form 2120 and Form 8332. And we begin with a discussion of Form 2120. In what circumstances is Form 2120 multiple support declaration used? Well, the purpose of Form 2120 is when you have 2 or more individuals who provide support for a person. They pass all of the dependency tests for claiming that person as a dependent except the support test. Neither of the individuals can show that each individually provided more than half. You could have 2 individuals who provided exactly 50%. You could have 1 individual who provided 40% and 2 other individuals who provided 30% each. But the point is that no one person can show they provided more than half. And if that's the case, then Form 2120 is used to release the dependency exemption to one of the persons who would otherwise not be able to claim the exemption because they didn't pass the support test. So what is Form 2120, or the purpose of it? The purpose of Form 2120 is for the people who are not claiming the exemption to release the exemption to the person who will claim it. And what happens if the parties cannot agree on who will be allowed to claim the exemption? Well, I want you to refer to Pub 17, page 34. Pub 17 does not specifically say that no one can claim the exemption if agreement is not reached. However, Pub 17 does say that Form 2120 must be signed by the persons who are releasing the dependency exemption, and the form must be attached to the return of the person who is claiming the exemption. We therefore conclude that if no agreement is reached, the dependent can be claimed by no one. What are the requirements that must be met to use Form 2120? Well, more than half of the support must be provided by 2 or more individuals who are related to the dependent or lived with the dependent as a member of the household all year. And they also have to show that no one person provided more than half the support individually, and that at least one person provided more than 10% of the support. Who attaches Form 2120 to their return? Form 2120 is attached to the return of the person who is claiming the dependency. It is signed by the persons who are releasing or not claiming the dependency. Number 6, we're moving on now to divorced and separation situations where you have 2 parents of a child and establishing who is the custodial parent. So who is the custodial parent? Well, it depends. If there is a divorce decree, then the custodial parent is the parent who is stated as the custodial parent in that divorce decree. If there is no such document, then the custodial parent is the parent who had custody for the greater part of the year. Now, which parent can claim an exemption if there is no written agreement or that it is not stated in the final divorce papers? Well, the first parent we always go to is the parent that has physical custody for more than half the year. So the custodial parent will always be the person who had greater custody unless we can show that there is a divorce decree or other written statement that allocates the child to a specific parent. So which parent can claim the exemption if there is no written agreement or is not stated in the final divorce papers? Again, we're going to say it's going to be the parent who had physical custody for the greater part of the year. That is who's going to get it. Now, if custody was equal throughout the year, then it would go to the person who has the higher income. Number 8, when can a non-custodial parent claim the child's exemption? A non-custodial parent can only claim a dependency exemption for their child if Form 8332 has been signed by the custodial parent, or a divorce decree or another written document awards that dependency to the non-custodial parent. Number 9, describe the purpose of Form 8332. Well, Form 8332 is used to relinquish the dependency. The custodial parent signs Form 8332, and the non-custodial parent who is claiming that dependence deduction attaches it to the non-custodial parent's return. Question number 10 was to prepare a tax return for the Sanders, and we made it a very simple return. John Sanders is married to Maggie Sanders. They reside at 222 Northeast Mississippi Highway in Aloha, Oregon. John is a manager. Maggie is a custodian. Involved preparation of a very simple tax return. We have John, who is married to Maggie Sanders, living in Aloha, Oregon, and John is manager and Maggie is a custodian. They've got 2 W-2s attached. They have 2 children that lived with them. Their son, Mark, who was born in 1998, that would make him 12 in 2010, and Maggie's nephew, Jerry, who was born in 1994, and that would make him 16 in 2010. He has lived with the Sanders since 1999, and they provided all of his support. Based on their Schedule M, which is prepared but not shown in the problem, the Sanders will receive an $800 making work pay credit prepare their federal return. Here are their 2 W-2s. We have one for Carpentry Express in the amount of $32,000. We have a second one made out from Happy Airlines to Maggie for $19,000. So let's prepare their tax return. Okay, so the starting point on the Sanders return is to select the correct filing status. And in this case, that's married filing joint. We can also see that we have checked boxes for the taxpayer and the spouse, and we've listed 2 dependents, both of whom qualify for the child tax credit. So the total number of exemptions being claimed is 4. Income is wage only. We've totaled up the 2 W-2s, and we get $51,000. Couldn't be simpler than this. We just go down to line 37, carry it over to line 38. The Sanders are going to claim the standard deduction. If they're a married couple, that's $11,400. Neither of them are age 65 or older or blind. We then subtract Okay, so let's take a look then at John and Maggie Sanders' tax return. We can see that they are a married filing joint couple, so we have checked box 2 next to filing status. On line 6A and 6B, we've checked for taxpayer and spouse and entered a 2 on the corresponding space. They have 2 dependents, Mark and Jerry, both of whom are qualifying children and both of whom qualify for the child tax credit, so we've checked the child tax credit box. 1 exemption for their child, 1 exemption for another dependent, this time the nephew. We then see we have box 4 checked, or not box 4 checked, but we've entered box number 4 in the box to show that we have 4 exemptions. We've now totaled up the W-2s. Okay, and here is the 1040 form for John and Maggie Sanders. We have John and Maggie who are married and filing a joint return. They will each claim exemptions for themselves, so 1 for taxpayer, 1 for spouse. They are claiming 2 dependents, and both of these dependents qualify for as dependents as well as for the child tax credit, and since they both qualify for the child tax credit, we've checked the child tax credit box for both of them. We total up the exemptions. The total number of exemption deductions will be 4. Then we total up the W-2s and enter the total of their 2 W-2s on line 7. Their total income is $51,000, and their adjusted gross income is also $51,000 because they have no deductions that we're claiming. On page 2, we enter the standard deduction for married filing joint. Neither spouse is age 65 or blind. We then get our income after our standard deduction, move on to claim the personal exemption deduction. To calculate this personal exemption deduction, We simply take $3,650 and multiply that by 4, and when we do that, we get $14,600. We subtract that from 39,600 and end up with $25,000. Now we go to the tax tables and look up the tax on $25,000 of taxable income for married filing joint. And when we do that, the tax tables give us $2,916. And now we can claim the child tax credit. Well, the child tax credit is $1,000 per child. There are 2 qualifying children. And you'll see here that the tax credit of $2,000 is less than the tax shown on line 46. So we get the credit in full, and that reduces the tax very significantly, down to $916. Their W-2s show that they had federal income tax withheld of $3,000, and you would look at box 2 of the Form W-2 to get that number. They're also receiving an $800 making work pay credit, and that is entered on line 63. So we add up the total credits and withholdings, and we get $3,800. We subtract $916, and you can see that John and Maggie Sanders are receiving a nice refund in the amount of $2,884. So that concludes the review of the Session 2 classwork answer key. I should just draw your attention real quick here to the student manual, because your work now is, of course, to go do the homework assignment. And oh yeah, while I'm here, I just wanted to point out federal income tax withheld is in box 2. And we added those 2 boxes together to get the $3,000. The homework assignment, we actually went through a good part of the homework assignment together already when we did classwork number 1. Remember, we were choosing the most advantageous filing status for all of these filers? Well, for the homework assignment, your job is to list all of the potential filing statuses. Okay, not just the most advantageous, but all filing statuses that they could qualify for based on the information provided. And although in the classwork we only went through situation number 10, for homework we're giving you an additional an extra 6 tax scenarios to deal with in terms of listing all possible filing statuses. Now, homework number B is to prepare a tax return, or to, not a tax return, but to answer questions 1 through 9. And what we want you to do is to look at the situation for problems 1 through 9. Okay, and the next part of the assignment is homework assignment part B. And there's no tax form that you're preparing as a part of this. This is more just analyses again. You're looking at tax situations, and you have to identify the following information for each tax situation. Number 1, what is the filing status of the person who is filing? Number 2, what is the number of qualifying children who can be claimed as dependents on the tax return of the filer? Number 3, what is the number of qualifying relatives who can be claimed as dependents on the tax return? And finally, what is the number of dependents that are eligible for the child tax credit? So let's do number 1 together, and then you're going to be on your own. Number 1 says, John and Martha are a married couple. They paid over half the cost of supporting their daughter, Georgia, who is age 28 and was unemployed during 2010 and had no gross income. So taking these together, what is their filing status? Well, John and Martha will file married filing joint. What is the number of qualifying children? They have no qualifying children because their child fails the age test. We're going over to the qualifying relative test. She passes all of the tests for qualifying relative, so they have 1 qualifying relative. And what is the number of children that are eligible for the child tax credit? 0. Let's move on to number 2, and then I'll leave you on your own to do the rest of your homework on your own. Jack and Jane are married. Their daughter Alice was born in December of 2010. Alice lived with her parents who provided all of her support. So again, the filing status is married filing joint. They have 1 qualifying child, and she also qualifies them for the child tax credit. So they have 1 person qualifying them for the child tax credit, and they have 0 qualifying relatives. Okay. So as I'm signing off on this course, I just wanted to remind you one more time what your job is now. And I'm just going to navigate back to the LMS one last time. Since we're still in the early stages of this course, I don't want any of you getting confused at this point. So we've just finished the lecture for session 2. At this point, you should go to the test tab and finish taking all of the tests under this tab, including the password test for session 2. You should enter the answers for session 1 or for classwork 1 and classwork 2 for session 2. You should prepare homework for homework A and homework B and enter your answers, and you should have taken the quiz in here. Once you have passed all of these tests, then you can go over to the completion certificate tab and print the certificate of completion for session 2. Again, all of the answer keys for today's class are located in the answer keys tab. We have homework answer key for session 1, and we have classwork answer key for session 2. If you have any questions about the content of today's class, the things we discussed in today's lecture, please enter your questions into the Q&A forum tab. We will certainly keep an eye out for any questions posted here and post answers within a day or two. The Help tab is for technical questions, and you should only use the Help tab if you're having technical issues. If you have questions about the content of today's session, including today's classwork assignment and the review of the session 1 homework assignment, please enter those questions here. If you have any questions about the session 2 homework assignment or the session 1 quiz, please save those until you've attended session 3 and received a review of the session 1 quiz answer key and the session 2 homework answer key. Thanks for attending today's class. I look forward to seeing you at the beginning of session 3. Thank you.